We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisade's Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Matt Riley, retired naval officer with a curiosity for economics and world affairs. Thanks for joining me, Matt.
Hey, thanks for having me on, Tom. It's an honor.
I wanted to get in touch with you and have a wider discussion about the BRICS, about nBRIDGE, about these payment channels that we've had, so many discussions about. You seem to be one of the guys that's done a lot of work into trying to understand this, really followed the story for a lot of years now, and really come to understand a lot of it. So why don't we start by having you fill in a little bit of your background for us and to kind of understand where you've come to this understanding and this curiosity from.
Sure. Yeah. So the background in curiosity, I have an economics degree. Like I've joked before, so does AOC. The certificate doesn't mean much as just the curiosity to learn, right? I have a fairly good understanding, I think, of global security and things that kind of undergird the economy and the financial system. So when I really started paying closer attention to it in 2020, when a lot of people started paying a closer attention to all things economic and other stuff. And when I started really digging into it, I saw there's some pretty massive changes underway. And the way I would liken it is, as an intel officer or enlisted guy, you want to inform the warfighter, whether it's an infantry member or a pilot or something like that. I would go to them and say, hey, here is the operating environment. Here are the changes. Here are maybe some things that you don't know about or that are new compared to your base level of understanding that you bring into the fight, right? And there are a lot of people that are operators, as you could say, within the financial system, and that have a tremendous amount of experience in trading, hundreds of millions, if not billions, of assets under management, that I would say, they are the war fighter for this, particular reference, that they know how to operate the current system and they've been operating in it for a long time. They're tremendously experienced. And I kind of came on the scene saying, hey, I'm not the only one tracking this, but to say there's some things you might want to consider and some changes that are happening that are going to change the structure of how we operate and how the system that you're master at is going to change. And like all changes and paradigm shifts, it's met with a lot of skepticism and prove it. And that's rightfully so. But I think it's what I've been talking about and what many others have been talking about, for the last several years, is really being borne out through evidence over the last couple of years.
Mm-hmm. As part of that, Matt, I think a big thing to highlight here is that these changes don't happen overnight. This is something that has taken already several years to develop and will take more time to really flesh out and to really see the impact of. So give us a little bit of perspective of the length of time that this has been considered and kind of bring us up to today where we are now.
I can give a brief answer, but for anyone that really wants a great crash course in the history that has brought us this point, I would strongly recommend an interview that Luke Gromen did with Grant Williams in March of 2022. And Grant kindly put on the outside of his paywall for all to see. And it will run down the financial history for you in short order. But it really changed after the global financial crisis circa 2008-9, and China, who was already preparing for a post-hegemon world order, really set about final preparations, so to speak. And their final preparations were mostly diplomatic in the way that they approach their peers and counterparts. So when they started making diplomatic inroads in the Middle East and trading oil for yuan on the Shanghai exchange, creating a gold exchange in the Shanghai Gold Exchange and the free trade zone, those are all, changes that are bringing us to this point, right? They've been developing the e-Sunni, their digital currency, since at least 2016 or 17. And a lot of the history behind nBRIDGE and the projects that preceded it goes back to 2017 as well. So, and the desire for them predates that a long time, right? But the actual stepping stones to make it happen started around 2016, 17. Mm-hmm. So when we look at things now, and some skeptics may say, yeah, well, they're barely starting. This is going to take a long time before they even get traction. Like, yeah, they were barely starting like 8 years ago, really. So they've got some significant traction. They're doing real world transactions on these new systems. And while it's still in its infancy, it's not a concept anymore. It's an actual functioning system. Mm-hmm.
So let's flesh that out a little bit more. We know the BRICS alliance. Maybe a good way to run through that is, let's start by let's say conceptualizing for those that aren't aware of who the BRICS actually are, and then get into more of what the actual mechanisms are, or the payment channels that we're talking about are.
Right. BRICS is really a diplomatic consortium that really started as BRIC with no S, as Brazil, Russia, India, China. Mm-hmm. They added South Africa, I want to say in 2011, 2012, something like that. Not real sure about that. And they have since added another 5 countries in 2023. And it really boils down to looking for ways to cooperate in the economic, military, not so much military, but somewhat, and in the information space and diplomatically. We look at it from an analytical perspective, strategically in the military for DIME, diplomatic, information, military, economic. And BRICS really hits 3 of those, less so on the military. That's what it's about, in short. They all operate within the IMF and UN-based system currently in different to different lengths, but their dissatisfaction with the global South and the emerging BRICS members' representation in that system is really what is strengthening BRICS. To the extent that they could operate within and gain power and representation within the IMF and the United Nations system, they would just do that. Mm-hmm. Right? But as long as they are being neglected or marginalized within that system, which has been the case for half a century or more, as long as that continues, that just adds fuel to the BRICS fire, and they can kind of see through gimmicks of talk about power share or votes that don't actually materialize because they've been baited too many times. So now they have the motivation, they have the means, and I would say within BRICS, that's the motivations, the diplomatic and information and economic sphere. The means is the technical stuff that we could talk about that has really given them an avenue around, because that's always been the biggest hurdle for them. How do we do foreign exchange? Whose currency is worth what? How do we conduct economic and banking transactions in the financial system without the dollar? they've prepared, and really it boils down to February 2022. Russia cut out of the system, out of SWIFT, and they weren't the first BRICS nation. Iran, I would point to, was that really lit a fire under initiating a process that they were preparing to do for a decade.
So then, to be a little bit, clearer about these actual mechanisms or the channels of which we're talking about, we hear the different terms of, let's say, nBRIDGE or the unit thrown around. What are the differences and, let's say, the particular roles of those specific terms, let's say?
So nBRIDGE is an actual technological infrastructure and management system for a distributed ledger digital currency exchange system, which it actually doesn't even have to be a central bank digital currency in order to be exchanged on that system. That's the actual backbone. While the unit or any gold-based or fixed point-based FX mechanism is a FX or foreign exchange concept that sets the foreign exchange rates between currencies. One of the key lessons from the pilot program in 2022 on nBRIDGE was the FX mechanisms primarily were off exchange and set off exchange and then executed on exchange. And one of the key learning points was, for it to be viable, they have to have a plug and play FX mechanism that is on nBRIDGE and transparent with a floating exchange rate tied to something that's not the currencies involved. Right. And we all know that really boils down to one asset, and it's gold. I mean, people can make arguments for Bitcoin, but really it's gold. And that's clearly what the participating central banks have been preparing for. So that's how nBRIDGE and unit kind of operate together. A technological backbone with a governance structure that's run by something called the nBRIDGE Steering Committee that has a bunch of subcommittees, technological, governance, legal, and things of that nature. That's the physical structure. And then the FX mechanism is gold in the form of a unit concept. You can call it whatever you want, but unit is the most defined concept.
Mm-hmm. So really, this is a way of handling foreign exchange by setting a benchmark of, let's say, currency exchange based on ounces of gold. Is that a fair way to put it?
Yes. But in a very, BRICS Eastern driven way, it's really about kilos. We got to think in grams and kilos and instead of in ounces and pounds.
Right. And this creates, a system of, not of competition, but a system of exchange to really determine the exchange ratios of these currencies, because without using, or we're using gold as the benchmark, not necessarily as the actual currency of exchange, right?
Correct.
So then, in that vein, though, how does gold play this role? You mentioned that many of these countries have been, adding gold to their central bank reserves. Why does gold play that, or why do they need gold if they're still transferring just the actual currencies back and forth?
They need something to store value in. They need something to store their reserves in that isn't U.S. treasuries or sovereign debt. There is a place for sovereign debt of all the nations involved in that sort of financial system, just like treasuries are involved. But gold is the most secure way, stored within your borders, or to the extent that you trust an exchange, be it in Dubai or Mumbai or Moscow or Shanghai, to store it. That's how they conduct their net settlement and store their value for future energy and service and manufactured good needs. Mm-hmm. Settle trade imbalances, right? Trade deficits cannot last forever, or they can't flow in one direction forever. And gold is the liquidity to settle that balance in the meantime.
Mhm. So when we've heard that this system is going to contain a basket of currencies, a basket of commodities, perhaps, how do you see that structure and where have we ended up?
So the basket of commodities talk was they want it fixed to something real and not just currencies.
Mhm.
But the basket of commodities was too volatile and too hard to pin down as far as quality. If you're talking about soybeans or grain, Brazilian agriculture versus Russian agriculture and Indian and things like that. And it really boiled down to gold being, especially because it's practically useless for anything else, the best commodity, if you will, but really money to fix the exchange rate to. And in the unit concept, the basket of currencies represents 60% of the value and gold represents 40% of the value. And that's fixed. Gold always represents 40% of the value of a exchange unit. The value of the currencies, the different currencies in the basket on the 60% side, their relative values change. Mm-hmm. So that's how they are able to conduct FX and keeping a fixed value of gold in the unit. And it's really the currencies that are fluctuating, not gold.
Mm-hmm. So, Matt, has this system been used already and is it starting to gain, let's say, volume of transactions?
Unit itself has not been, to my knowledge, plugged in as the FX mechanism in nBRIDGE, but gold is definitely net settling trade imbalances and being used as direct payment methods for energy from Iran, Saudi Arabia, and to some extent Venezuela and Russia as well, especially post 2022. Mm-hmm. And it's also being used between the UAE and India. There's a lot of bilateral central bank agreements between every one of these countries involved in nBRIDGE and to a large extent BRICS as a whole. Their approach has not been to this point to have an overarching mechanism that everyone has to sign on to that's controlled by a central authority. The decentralized nature of it is its a strength and a weakness in many respects, but it's also its main strength. And that's done through bilateral central bank swap agreements and exchange agreements. So you see there's gold flowing to and from India and Dubai. That's what's made Dubai now the second largest gold trading hub and potentially soon to be the largest gold trading hub in the world, second to Switzerland right now. Sorry if I'm rambling. Let's circle back to your original question. Make sure I'm answering it.
Well, that's actually something I did want to cover with you is, again, kind of stepping back and taking this perspective of these changes happening over a longer period of time and being able to see these changes for what they are with that experience of time. How and why has Dubai, let's say, taken over London as being, a bigger exchange now?
Really, it boils down to trust and diplomatic neutrality. If you look at the way the Emirates have been involved in brokering détente or peace between Saudi Arabia and Iran, they did that with their involvement in the conflict with the Houthis and with Qatar also. They're an important diplomatic nation in the Middle East and a neutral player that is trusted, at least to some degree, by all sides in the Middle East. For a long time, both in the black market and in the legitimate market, they've been the primary gold trading hub for Africa. So as African gold mining increases or becomes more legitimate, that grows the UAE's market share. When Russia was frozen out of the system in 2022, a lot of their international assets and the assets of oligarchs within Russia went to Dubai. That's just at every turn, they're increasing their market share and building trust across different parties that may not agree with each other, but they agree to trust Dubai or the Emirates at large.
Mm-hmm. So the BRICS recently had a summit about this currency and how it's going to, let's say the next steps going forward. Our mutual friend Vince Lancy said at the last meeting, there was, a lot of expectation that there was going to be a lot of announcements, big announcements or big pronouncements made. It seems like this is more of, again, a process rather than an acute announcement. So what came out of the last meeting and what was the net result of that?
A lot of the results of the meeting happened in the year leading up to it, with all of the meetings between the central bank governors and financial authorities of BRICS nations, somewhat manifesting in some announcements through the BRICS Pay consortium that happened before the Kazan summit. Mm-hmm. But a lot of those accomplishments are not mentioned as a line item in the, I think it's like 64 line item declaration from the BRICS summit. And they don't need to be because they're already operating. One of the things that I think is important to note that challenging a hegemon is very difficult. They're the incumbent. The US dollar system, the euro dollar system, and the IMF are the incumbent. And if you present a centralized center of gravity, we would call it in military planning, of declaring this thing called BRICS and here's how it's governed, and here's what it does, and here's how it operates, and all the BRICS nations are on board, and we're going to use it to circumvent the dollar. That presents a centralized target for the IMF-based system, the intelligence agencies that back it, to come after you. Mm-hmm. So the decentralization of a new financial system serves multiple purposes, but two to highlight are it presents a dispersed target for the incumbent to counter. It's more of an insurgency style countering of the current financial system. And it's also a strength as far as the participants are concerned, because it avoids the centralization that is one of the key things that they don't like about the current system. So coming out of Kazan, they coordinated and launched BRICS Pay to some extent, but really that was an introduction to QR code based digital rubles. And those things are already happening with the digital yuan, and testing out and proving out the integration of multiple real-time gross settlement systems, RGTS, and how they integrate on the ISO 20022 standardized message system. And that, I always struggle with that. It's like, do you call it 222? Well, that could just be 3 twos, but anyway, it's awkward number. But they, the BRICS participants are all creating or all already have created systems that transact messages on that format, and that could be integrated into the nBRIDGE system. And you see the West responding against that nBRIDGE system, nBRIDGE being called BRICS or, any kind of relation between it. Soon after, Augustin Carstens, head of the BIS at the IMF summit in Washington, a little over a month ago, I want to say, came out and said, we're done with nBRIDGE. nBRIDGE, we don't want to have anything to do with any system that's going to allow sanctions evasion or basically independent financial transactions outside of the IMF system. So that's while he's in DC, right? As soon as he leaves DC and is at a different conference, he releases a statement saying, well, we're no longer a part of nBRIDGE because nBRIDGE has become fully mature and it doesn't need us anymore. We're turning it over to the participants. It's just the BIS wants to be involved in everything, right? They never want to be cut out of the system, and they're caught between a rock and a hard place between BRICS and the G7. Mm-hmm. So you see these conflicting statements from Augustine Carson's. Really, it boils down to they never controlled nBRIDGE to begin with. And as soon as they realized they weren't going to be allowed to control it, they took their ball and went home. And that's just another example of that's an attack vector. If you call nBRIDGE BRICS and rename it, or in any way link it to sanctioned countries, you provide a public statement that gives the IMF and G7 leverage or an attack vector on that new system. Mm-hmm. So leaving it undefined in the West prevents them from having attack surface on it.
Right. And do you think that there's any importance to the fact that Russia is I don't know the right term for it. Is it the BRICS president this year?
Yeah, they hold the BRICS presidency this year. It rotates to Brazil next year.
Mm-hmm. So is there any importance or significance to that this year?
It was a limiting factor for sure. Mm-hmm. And the weight carried by the diplomatic statements that comes from a geopolitical summit held in Russia, regardless of who the participants are or how long the organization has existed and pre-existed any current conflicts, it definitely is a black mark that none of the participants, quite frankly, including Russia, want associated with new financial systems.
Mm. Matt, when we think about, again, the changes of the system over time, we've seen other countries, let's take, for example, Argentina, kind of pull back on its support for the BRICS. I've seen some rumors that Brazil might be doing some of the same. Is this system, does it really incentivize these countries to respect and be involved in this system because of let's say, the neutrality with which they're able to trade, rather than just trying to support one alliance or the other based on who's currently in power?
The decentralized nature of BRICS does lend itself, particularly to Brazil in this instance, to be able to participate in it while not making a declaration of one side or the other. Essentially, no BRICS communique or growing financial system is going to be the one to say us or them, choose a side. That's going to be the IMF and the G7 every time. Mm-hmm. And BRICS is using that, and China in particular, and to some extent Russia, is using that to their advantage and growing the BRICS network. But Argentina and Brazil both have a fine line to walk, as does Saudi Arabia. Over the last year, you've seen, well, is Saudi Arabia the 10th member or not? Are there actually 9 members? There were 5 before, and then they invited 6 more. Argentina said no. 4 said yes. And then there's Saudi Arabia just sitting in the middle being quiet. Basically being a member, but not outright coming out and saying it. Mm-hmm. And I think Brazil is trying to walk that same fine line although for different reasons. In Argentina, it was easier for the West, US in particular, to influence its leaders, especially with the debt overhang that they have with the IMF, to decline BRICS membership. And I think there's not a small possibility that if any thumbs were put on the scale of Argentine elections, that Javier Milei's outright disdain and dislike of communism in general, but China in particular, may have played a role in Western intelligence agencies supporting, or at least in some effect, allowing him to win an election.
Interesting. I always find it, such an interesting thing to consider how, this grander picture of how all of these different possibilities or situations happen, whether it be an election, whether it be, the rise of a competing currency, and the incentives on the back end of that, and how they play in as well. Matt, when we think about, moving forward with this currency, what do you think this ends up meaning for gold in particular? And maybe we can contrast that by also kind of weaving into that what that means for silver as well. Russia recently put silver on the list of one of their strategic metals. So does that mean that silver can play a role there at some point?
I think it's much easier to define what role gold can play and will play in the growing financial system. And a lot of countries have outright come out and said it, and they're trading gold, and it's functioning as a store of value and things like that. In the same way that since 1980 to roughly 2022, U.S. treasuries increased in value over time as their interest rates trended down, right? It wasn't a straight line function, but over time, generally, U.S. bonds increased in value. And I think we're looking at that same function in gold from a bottom in 2016 to, you can extrapolate all kinds of different functions of like, well, it went up this much in the 70s and it went up this much from Brown's bottom in 2000 to 2011. I think all those comparisons are out the window, quite frankly, not in the sense of it's going to be more or less, but the paradigm has changed as to what gold it is. It's openly not a commodity, it's money. And central banks are saying that between the Basel Accords, the central bank, PBOC in China, Central Bank of Russia are openly saying it's gold that they're going to use as money. So I think you'll see a multi-decade increase in the value of gold. I don't know where it tops out at in dollar terms, because that has as much of a function to do with what happens in the U.S. economy as it does what happens in the global monetary system. Generally, gold appreciates against all other real assets. That's what it boils down to. Not in a straight line, and it'll happen over time. Now, how that integrates with silver, I don't think silver will be monetized in the same way that gold is. And look, I'm a diehard silver stacker and all, but I don't know that the gold silver ratio is going to, keep going down, and that's going to be a long-term trend. We'll probably see some flashes in the pan where it drops to, pick a number. I mean, it could be single digits, it could be 30. I don't know. We'll see a crash in that ratio as silver catches up. But long term, if you look at a financial system based on gold, gold has to provide liquidity for energy and commodity markets, service markets, manufactured goods, and things like that. And when it's doing that, silver is just a function of that. Silver's value will increase compared to currencies, but I don't know that long term it's actually going to increase all that much to gold. You have to remonetize gold long before you ever get to the point of talking about remonetizing silver, because that's the reverse order that would happen. Silver was demonetized first, and then gold was demonetized. I don't think it's likely that you see both of them remonetized at the same time, especially now that silver has to fight the uphill battle of being an actual useful commodity. That's critical to a lot of parts of our economy.
And again, going back to the incentive of that, none of these countries that use it so much, let's say, taking China, for example, for their solar production, they don't want to see $100 silver. It's not that it necessarily, expands the cost of a solar panel exponentially, but the cost of a raw material that goes into that, they don't want to necessarily be or see as being overly volatile or overly high either, right?
Yeah, it will be an inflation hedge in a sense of, they want it to be expensive enough that it's profitable to mine and use and maintain access to it. And a lot of the, not storylines so much as the facts about, silver mining deficits over the last 5 years and depletion of above ground stocks and lack of capex in the silver mining space. Those are all legitimate drivers of a potentially explosive silver price in the years to come. Mm-hmm. But that is not the long-term story of a monetization of an asset. And that's just a lack of capital management and stocks. Mm-hmm. Not necessarily tradable stocks, but I mean like above ground stocks of a metal.
And kind of coming at that from a different perspective, how do you see, the role of silver, I guess as a money, if that ends up coming back into the system, as you said, obviously, gold plays this role of needing to be remonetized first and essentially liquefying many other transactions, downstream from that. And, you brought up the fact that for example, the silver deficit in production, those fundamentals are always pointed to for the rise of silver. When do you think those fundamentals start to actually create positive price movement in the underlying commodity?
I think the second part of that question, the price movement, is going to be reflective of real economic growth in the BRICS nations, be it through solar panel production, solid state battery production. The most likely monetization route is through India's involvement in BRICS, because it's much more valued there as a money than in any other BRICS nation. Mm-hmm. And if gold gets into a liquidity crunch, and goes to the moon, as they say, you could see a catch up in silver because it's used as an interchangeable store of value. I think anything really on the atomic elements table, where there's no debate about its purity and it's portable, can be used as that. And silver is really just kind of the next asset on the ladder to be monetized. I think that's certainly a possibility. Vance talks about that, and I agree with him to a large extent that silver could be monetized in kind of a backhanded way. Mm-hmm. not explicitly in the way that gold is, but in a substitute of value sort of way for nations that don't have access to as much gold.
Matt, what do you think that this ends up meaning for oil as well? Much of the current hegemony of the US dollar is based around or was based around the petrodollar. So do you think that this ends up changing, let's say, the alliances and the strength of not only the dollar, but OPEC as well?
The short answer is I don't have a good short answer. I don't know is the most honest answer. There are people that are a lot more well-versed in the energy markets and what it means. Generally, the price of energy, not just oil, because you got to look at kind of the whole energy sector. To some extent, they're substitutable over years, and say how much of that is produced in BRICS nations or in non-IMF power center nations. I think the United States in particular is in pretty good seat as far as oil production. I would say the same for Canada. And the ability of different industries to pivot to natural gas. And it depends a great deal on how well we subsidize and bring online small modular nuclear reactors with thorium salt cooling and things of that nature. There's so many things to play into the value of oil per se that's really across the energy sector. I think it serves BRICS and all other players that oil and energy remain as stable as possible. I would say the price is too low right now. It's being suppressed. But very volatile energy prices is good for no one.
Yeah, that's a great way to put it. And I think the ability for any of these countries to be able to transact and get the energy that they need, whether that be Russia selling their energy, whether it be, Saudi Arabia getting their energy out a different way, that likely, I guess, in a simplistic way, creates more stable pricing. Now, that doesn't end up, that might come as a countercurrent to the current hegemony, which isn't necessarily a positive thing and will, very likely want to be stopped. But, it's an interesting piece to consider.
Yeah, it is a double-edged sword, right? We want to have energy priced in dollars in the West and preserve the value of it. But BRICS writ large is trying to isolate themselves from the debt problem that the dollar-based system is facing. And that debt problem's always been there, but it's been kicked down the road time and time again. And we've kind of reached end game as far as the escape velocity of interest expense and annual U.S. budget deficits and things like that, where there is no other outlet other than to devalue the dollar. Trump and Vance have openly stated, really over the course of summer, if you look at some of their statements, they're going to devalue the dollar. Like, they've openly said the dollar is too strong. It is too strong for American exports. It's too strong for the price of our imports. And so a weaker dollar is coming. Now, who wants their entire energy needs and global trade needs to be priced in a currency that they can't control and is fluctuated purely on the needs of one nation? Nobody does, except the US. So it's about independence and sovereignty. But if you just looked at it from a plain math perspective, it's also in their best interest, just for stability purposes, to isolate themselves from the debt bomb that is the US Treasury market.
Mhm. And even I think saying that it only serves the US is almost missing part of the point as well for the average US currency holder, right? Like
Yeah.
to have, it might serve US exports and imports
Yeah.
and use of the dollar, but
It serves financial interest to have a high value dollar. Yeah.
Mhm.
The decreased value of the dollar and domestic inflation can, in theory, serve the working class if their wages can't keep up.
Mhm.
If labor's share of production and capital can increase, then that's a good thing. You're right. I made kind of an overly broad statement there that it can be a good thing for a devalued dollar for Americans.
Yeah, and I don't mean to correct you or anything like that, but thinking of that, let's say the double-edged sword nature of strong versus weak dollar, there's always let's say a nuance to consider there.
Yeah.
So Matt, what do you think? Obviously, this is going to involve a little bit of speculation, but what do you think the system, this BRICS pay, what do you think the system looks like, let's say 5 years down the road or 10 years down the road? And what changes do you think are important to consider as part of that evolution of this trading currency?
I think the BRICS pay system in the 2 to 3 year time frame looks like a lot of strengthened bilateral agreements. There is a multilateral function in nBRIDGE or BRICS BRICS Pay, things like that, that will be multilateral. But while the dollar is still strong, and particularly Trump in office and his tariffs and his economic approach could delay this, I think the actual transition to a true multilateral system is probably in that 3 to 10 year time frame. It's going to grow. nBRIDGE and multilateral settlements are going to grow, but their first path is increasing bilateral settlements in local currencies where they can much more easily set FX rates. How quickly we transition out of globally that bilateral dominated world will depend on really the monetization path of gold, in my opinion, and how they manage that system, of inventory management, validating the trust in the nodes that store it and audit it. That will be the linchpin of the transition from bilateral swap agreements to multilateral settlement systems.
Mm-hmm. Interestingly, there you mentioned the idea of tariffs. Considering the ability, let's say the growing ability to transact with other countries around the world, do you think that this lessens the ability for countries, let's say taking Russia in particular, to be so negatively affected or incentivized by these sanctions from the US?
It does significantly reduce the power of sanctions. And it's also an information war, right? And how you frame the narrative of, well, are they violating sanctions or are they just conducting business that you don't approve of? And that narrative war is shifting, especially in the global South, which is where it really matters. I mean, they're just carrying on. I think it's important to note that to a large degree, the sanctions against Russia have been pretty useless for actually negatively impacting the Russian economy. And it's fairly predictable that would be the case. So why were they put in place? I would argue that by and large, there is a financial iron curtain going up between the G7 and BRICS nations, and that those sanctions are actually capital controls on the West to prevent capital flight from the IMF-based system into the BRICS-based system. That iron curtain is being constructed to constrain Western investors more than Eastern ones.
Interesting. Yeah, that's a big point that is worth considering as this system grows, right?
Yeah.
Matt, kind of getting to the end of this discussion here, is there anything that you would like to leave our listeners to think about? It doesn't necessarily have to be centered around the BRICS currency here, but anything that you'd like to leave our listeners to think about.
Yeah. A lot of this can be considered doom and gloom if you're in a Western economy. But I don't think that necessarily needs to be the case. And like we kind of touched on when we talked about the value of the dollar, this can be good for working class people in the West. Mm-hmm. And we talked before this, and I brought up that something that's kind of always stuck with me is reality minus expectations equals happiness. We need to shift our expectations to family and community and start rebuilding things that really matter. Our financial system is hollowed out what real value lies in our lives, and that's in community and loving your neighbor. Ultimately, all of our financial assets or wealth mean nothing if we don't have community and love our neighbor and receive love from our neighbor. And I would just encourage people to focus on that. When you talk about wealth or capital, there's social capital that is the most important thing that you could ever have. Mm-hmm. So build social capital more than financial capital, and you'll be more wealthy than you could ever imagine.
Well said, Matt. I appreciate that perspective, especially, considering many of the things going on in the world, much of your experiences that you and I talked about before we hit record here today. That's something that we've spoken about a good amount on the show. And I think, never ceases to or never can be, let's say, overstated.
Yeah.
So for those that are interested in hearing more from Matt, you're available on Twitter at EF Bullion. You make, some good appearances on Chris's channel over at Arcadia Economics as well. Anywhere else you'd like to point to?
Not really. There's you, Chris. There's a ton of good guests that you guys have on, and that's been a huge part of my education. You'll see me on Twitter at EF Bullion. I talk about precious metal stuff and kind of international affairs more. But as far as education goes, I just encourage people to listen to you, listen to a lot of the great podcasts that are out there, and blend it all together. Take nobody's word at face value. You got to study it for yourself. I just appreciate the opportunity to contribute to it.
I really appreciate your time as well, Matt. And I think, to kind of reinforce your last point there, my goal with this show is to create a platform by which we can triangulate where we are in the world. I'm not particularly taking one person's word as the end all be all. That's why I try to interview so many different people from different sides of every situation so that we can understand what makes the most sense to us by having competing opinions, not necessarily just one opinion and this person is right no matter what. that keeping an open mind and trying to hold two competing ideas in your head at the same time and evaluating each based on the information they contain or the backing that they have is extremely, extremely important.
Yeah.
And I want to thank you for contributing to that conversation as well.
Yeah, I appreciate the opportunity.
Excellent. Thanks, Matt.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.